This particular event, you are going to learn the option strategy. So, four different concepts I am going to explain here. The first one will be how to use our option strategy software. Many of you are having our option strategy software. And how you can utilize this software for the option strategy analysis, whether any software is really needed for option strategy analysis or not. Then third point is whether the trend analysis is essential for option strategy formation. Many of the traders, they used to say that trend analysis is not essential for option trading. So I contradict with that idea. And the fourth point we will be discussing on option strategy with the objective to gain consistent gain, monthly consistent gain. Again, I will be repeating here, this particular strategy, if you implement as per the conditions or as per the rule specified in this particular program, then only you can get the benefit of that, or else not. Simply buying certain things and selling something is not going to give you that monthly consistent gain. There should be some procedure. If you follow that procedure, then only you are going to gain from that. So once again I repeat, the objective of today's event to know a strategy which can give us monthly consistent gain. Consistent gain means some amount of gain we will be getting every month. Second, whether any trend analysis is actually essential for option strategy formation, whether any option strategy software is really needed for doing the option strategic trade. So these are the four aspects we are going to discuss. So I'll be taking you to the software what we have. So the desktop edition of this particular software you are seeing here, option strategy software. It has different interface, like it has an option scanner. It can scan and give you the best strike options to trade for intraday trade or for the weekly trade. It has user action option strategy analysis, where you can form any strategy of your choice. Save and compare, you can form a strategy, save it, and after 2 or 3 days you can again recall that strategy and compare it. So know that when I have formed what was the net Greeks and currently what was the Greeks, to know that. And calendar spread strategies, and left side and right side we have given a couple of scanners. So if this 5/2 spread combination you are going to form, then with different strikes what you are going to get. So though all these features I will not be able to explain in this particular program, so I am just going to the user action option strategy analysis. So this is the main interface or very important interface of this particular software. Suppose if I am going for the Nifty, I am just loading the data. Here the expiry is 28th November, monthly options data. Suppose if I am buying say 11,900 call options, I am buying one lot. I am selling say to 12,200 call option or 12,100 call options. I am selling two lots. So if I do this, then what will be my payoff? If I just want to hold it for 5 days period. So if I calculate, it gives me, if the index of the Nifty future falling, this is future reference. If the future is falling, then I will be having so and so losses and different levels. Like at 11,535, I will have 2,600 losses. Same way, if it is going to 12,259 during this 5 days period, then I will be having a loss of 5,600. So besides that, it has a net Greek analysis. When I form this strategy, what is the net delta, net vega, net theta? So all these things is there. So most probably you will be knowing what is the meaning of theta. Theta means time value per day. So every day you hold this strategy, positive theta means you are going to earn 1 rupee 65 paisa with the net lot. So two lots you sold, one lot you bought, so you have a net quantity of 75. 75 into 1 rupee 65 paisa will be your time value gain per day. So same way the delta, if this particular Nifty goes up by 50 rupees, then 50 multiplied with 112. So 6 rupees value will be get added to this strategy. This strategy, each 100 rupees move in the Nifty will add 12 rupees profit into your basket. Same way, every 100 rupees fall will deduct 12 rupees profit from your trend because it is positive delta. In uptrend you will make the profit, downtrend you will make the losses. Positive delta means in uptrend you will make profit, downtrend you will make losses. Similar meaning is there for the Vega and Omega and Gamma, all these things known as the option Greeks. So this is the another one benefit of this particular tool. Third, you'll be going for a Greek scanner. So it whatever the tradable strikes are there. So all strikes, whatever is in the November 28th expiry, whatever the strikes are trading, their premium, their delta, gamma, vega, theta, omega, IV, all things is getting calculated, and in one click itself you will get all informations. Then we have an advanced price trend analyzer. So this will give you the monthly trend and the weekly trend, including its consolidation band. What will be the consolidation band? So on clicking this, what your strategy's profit and loss will pop up here. If it consolidates in this band, so how much profit you are going to get. And every trend level also you can get the profitability here, profit or loss. So every level of your trend, what is your net profit loss, that also you will get. So these are the interface of this particular software. And besides that, and if you want to save this particular strategy, suppose if I just want to form this strategy and save it for my future reference, so I am just going to form the same strategy and my objective is to save it for the future reference. So I am just going for the call option, same strategy I am forming here. I am buying one lot and I am selling the call option of say 12,100 call option. I am selling two lots. So this is for 5 days period. I calculate it, and post calculations, if I just want to save this, it is asking me for the file to save. So I am giving Nifty 14th November 2019. So this is the strategy name I have given. It is telling that your profile has saved correctly and where it is got saved, so that location also we are coming to know. So if in future after 2 days if you want to see that same strategy, you can go for the load profile and you will get all these strategy names here. So you can just select the strategy, load this profile. So here all your calculations will come here. So whatever the calculations you got on that time, same calculation will pop up here, including its net Greeks and other things. So this is also one extended edition of that same feature. Besides that, you have many other features. So this is about the software, and this also has an Android edition with little enhancement. You can able to increase the IV and project your profit. You can able to add IV. Suppose I am forming a strategy now. If I can, my IV goes up by 5%, what will be my profit? If my IV fall down by 5%, what will be my profit or loss? So this also you can do it in the Android edition. Desktop edition, that feature is not there. So this is the different interface based on your skill set, based on your exposure in the option strategy. You will be using different interfaces. And once again I will tell you, option strategy is a difficult study and you need to bring the expertise inside you. You need to learn little bit so that you can able to implement this strategy. Though it is difficult, but it has lot of benefits to pay you. So anything which is difficult has specific benefit. So that benefit part also is there. That's why it is difficult. You are implementing strategy means it is a plan. You are planning your trade. You are doing a money management. So all these things have the benefit part of this strategy. So this particular strategy software you have seen now, and it has a login interface, and same login interface using, you will be logging into the software, and this software will give you different results. Now coming to our second point, whether any option strategy analysis software is required. Definitely it is required. The reason is, without the strategy software, to get the net Greek values, which is very important. Suppose if my strategy is having 13 rupees as a plus 13 rupees as a theta, so that says every day by day end 13 rupees value will be added, or 13 rupees into net lot size I will be getting as a profit. So same time, if my theta is negative 5 rupees, so by day end 5 rupees of time value will be decayed, and that should be multiplied with my net lot size to get the actual profit or loss projection. So this part is very essential to know your net theta, net vega, net delta. So for that, one tool you require. Third point I'll be telling, whether the trend analysis is required for option strategy building. Majority of the option strategy trader, they will contradict with this idea. They need to say that I am planning my trade, then why should I do this option, why should I do the trend analysis? So if I am planning these things, then what is the point in doing the trend analysis? That majority of the option traders will be having that view. And same view also many of you will be carrying. If you will be saying that if I am forming a delta neutral, if I am forming a theta positive or time value positive or time value negative strategy, then what is the point of doing this trend analysis? So trend analysis, you are overruling. So here I just want to say you one thing. Trend analysis is highly essential whether you should go for a market neutral strategy or go for a trend direction strategy. Directional strategy means in uptrend it will give me the profit, downtrend it will give me the profit. Neutral strategy means in any way market move by 500 or 200 points, I will be getting the profit. So in both the cases, trend analysis is highly essential. The most important part of this trend analysis is it will help you to identify a correct strike which you can choose for your strategy. So without trend analysis, you can't able to do that. So trend analysis is very, very important for your option strategy formation. Do not overrule it. You need to follow the trend analysis. So now coming to our last part, which is our monthly consistent gain option strategy. So this, many of you will be struggling to get in many places that whether I should have any method which can give me a consistent profit month on month basis. So this particular view, many of the traders will be having. So you are going to learn one such method. So before that, I have a small announcement here. So 23rd, 24th and 30th November, we have scheduled an online option course. So details, you can find it on our seminar link of our website, and it is a 590 rupees course. If you are interested, join this particular course, because post this course, option strategy course will again conduct after 2 or 3 months. And what is the importance of joining this course now? So that also has a view. So if you see recent developments, regulatory bodies like your SEBI, like all our regulatory frameworks, they are thinking that strategic trade is going to help the investors to grow the wealth. So what is the major drawback of this strategy? Major drawback was that margin. It takes a huge amount of margin. The recent developments, if you just see this recent development, those who are the member of Smart Finance, those who are the paid member of our software, I have given it few days back there is an article in Economic Times. This says that SEBI is trying to reduce the margin requirement for the option strategic trade. So there is a thinking is developing now. So this thinking was not there. So though we are propagating for many years, but this particular thinking was not there. And much before that also, there was an article in Money Control, this same subject, there was an article. You can say also this particular article on 30th October, November you got in the Economic Times. So this also says that lowering the margin requirement of the hedge trade in the F&O. So this, and here also it mentioned that span margin is going to be applicable, which will be your, you can say the workout to be under the new structure. So he is telling 80,000 of margin is going to come down to 5,000. So where the position which was taking 80,000 rupees as a margin is now going to cost you 5,000. So if you are not prepared, if you have not known how to implement these particular strategies or how to take the benefit of this planned trade, then this development is not going to pay you back. You are not going to take any benefit out of that. So prepare yourself from now to be an option strategic trader. So that is two recent developments is that you must prepare yourself. So whether it is our course or not, but you must prepare yourself for the option strategic trading. So this information I have said. Now we will be moving to the last part of my presentation, which is monthly consistent gain objective. So before starting this thing, I have just one small explanation to give you here. So I have just taken one ratio spread. So what I am doing here, 31,000 it is Bank Nifty, 31,000 call option and 32,000 call option. I will explain in detail. Just have an observation on this. 31,000 call option and 30,500 put option. This one lot I am buying. Carefully look into this. I have given one lot I am buying, 31,000 call option, 30,000 put option. Just 1,000 point above, like 32,000 call option and 29,500 put option, I am selling two lots. So if I do this trade or initiate this trade today on 14th of November, on 21st expiry, 21st November expiry, like I am buying at 31,000 call option at 197, I am buying 30,500 put option at 207, selling 32,000 call option and 29,500 put option, each two lots at 29 and 70 rupees 15 paisa. So here it says, and expiry days is only 8 days are remaining till expiry. So it says that 311 rupees money I have to pay. Same strike, same style of trade, if I initiate in 28th of November expiry, very carefully listen this. Three different expiry I have taken, 21st, 28th, 26th. So these three expiries I am taking here. Same strike, 31,000 call option I am buying, 30,500 put option I am buying, each one lot. 32,000 call option, selling two lot. 29,500 call option, put option, selling two lot. Same expiry. 21st November expiry if I initiate, I need to invest 310 rupees plus the margin, applicable margin. What is 2,54,000 current rate? Because once that SEBI rules are being imposed, this is expected to fall. So 28th November expiry if I take, I have to invest 326 and it is multiplied with 20. So this much of money I have to invest. But have a surprising look here. If the same strike is being chosen for 26th December expiry, then your involvement is only 4 rupees into 20, 80 rupees. So 3 expiries, if the same, if the strategy implemented for 21st November expiry, 8 days left till expiry, 311, 15 days left till expiry, 326, 43 days left till expiry, your involvement is only 80 rupees. So what conclusion you draw from here? Forget about what is the name of the strategy, what is the caste, name, religion of that strategy. That is not our domain. These 3 expiries, same strike, if you are saying here, one is having 8 days left till expiry, involvement 310 rupees, 311 rupees. Another is having 15 days till expiry, 326 rupees is involvement. One more is there, 43 days left till expiry. My money is only 80 rupees. 80 rupees. So this says, many conclusions are coming that it is time value, it is related to certain things. So here one major conclusion what we are drawing here, if this strategy, very carefully listen to this part, if this strategy is taken now and if it is hold to a time period such that only 15 days will be left till expiry, means if you take this strategy now, so 8 and 3 1 as 2, 28 days if you hold this strategy, then this particular 4 rupees of involvement can give you 300 rupees of profit, which is coming to 6,000 rupees. So this says that if I can initiate this strategy, hold it for 28 days, means December series will be having 15 days left till expiry, I can get 326 minus 4, 322 into 20, so almost 6,000 plus profit. How much margin is required? 2,54,000. 2,54,000 rupees worth of margin, if it can imposed for 28 days, it gives you a gain of 6,000 rupees. This is what it translates in terms of a profit. So now question comes here, if this is the thing, is it real that I can get that things? Because here I am seeing that okay, theoretically it looks very good, perfectly right. So if I initiate in 28th November, I am getting 326, I have to spend now. But in December, if I just initiate and hold it for 28 days, that means 15 days before the December monthly contract expiry, I can get this much. And I have also given one more example here. 21st November expiry, if this same strategy can be involved in the 7th November, from here only the trading of those strikes have started. 7th, 8th, 11th, 13th and 14th. So I am seeing that my involvement is 323, 321, 371, 330, 310. So not much losses is there. So now question comes, in which condition this will give me? It is okay that okay 28 days if I can hold, it is projecting me 6,000 profit. But during this 28 days period, if Bank Nifty fall down below 29,500 or it is going above 32,000, can this profit will be holding good on that big situation of time? Because two lots I have sold, it will not hold good. It may be giving you a loss, because if during this period of 28 days, if Bank Nifty consolidates between 32,000 and 29,500, then it is okay. It is going to give you that 6,000 rupees profit. If it doesn't happen, then this is not going to give you the profit. Rather, it will give you the losses. The losses will come through the intrinsic additions. These losses will come that you have anticipated for 28 days it is going to consolidate in a band, and that band is going to be penetrated. This band is going to cross that time. So for that reason, it may not reward you that profitability. So now what is the solution for that? So there will be a solution. So when there is a problem, then definitely there should be a solution. So I am now going for little bit of tweaking this particular strategy technically. So for that, I'm just going for the Bank Nifty December future trend analysis for 10 days period. So my first rule is this strategy should not be hold more than 10 days period. So it should be kept for 10 days period. And 10 days period I have analyzed, and I have just got this is the first cycle, second cycle and third cycle trends. So I am just concentrating on the second cycle. First cycle I do not want to enter. So second cycle it gives me 31,700 starting, 32,988, 30,000 downtrend starting can go to 28,878. Even though if you do not have the software, just do it manually as per the informations from the NSE. So NSE, you can get the volatility of that particular instrument. How you will get the volatility of that instrument? So just go to the future section of this thing, Bank Nifty, and so if you are having our software, it gives you a real-time volatility estimate. However, here too also you can get it. So go for the December expiry. Just get the data points for the December. So get the data points for the December. So here December. So December data is not coming here. However, you can get the volatility here. Other info, if you expand, it gives you 27.09, 1.42. This is your volatility picture it gives you. So now coming to the volatility picture, once you get it, you need monthly volatility. So for monthly volatility, what we have to do? So whatever the yearly volatility is there, 27.74, there is for the December, you have, but that data did not load, you can check from your end. December future, expand that, you can get that 27.74. I am dividing it by square root of 365 and multiplying with the square root of 30 because I want the monthly volatility. So once I get the monthly volatility, it gives me 7.95% of monthly volatility. So multiplied with 30,903, which is the last traded of the December future, I am getting 2,457 points is expected move. I am taking 1/3 of that. Why this 1/3? Why not 1/5? Why not 1/10? 3 cycles. Every trend is having a 3 cycle movement. Elliott wave is having a 3 cycles of corrective patterns, 5 cycles of impulsive pattern. So we are just dividing it by 3 and we are taking 819 points. I am adding 819 with 30,903, getting 31,722. I am subtracting, I am getting 30,083. So this trend analysis I am doing just to choose the correct strike for my trade. So I am deciding upon 31,500 call option and 30,000 put option, the nearest liquid strikes. Here also some question came that Rajkumar ji has told that no liquidity will be there. We can get the liquid strikes. It is not that we will not get any liquid strikes. So you are going to hold this strategy. So there is no point in hurriedly enter this thing also. So you got the strike of your choice, 31,500 and 30,000. This call option and put option, each one lot you are going to buy. 1,000 point above, 32,500, 29,000 put option and 32,500 call option. Each 2 lots we are going to sell. So this is what we are going to. So this is going to help you to identify your trades. So now I am moving to the option chain part. So Rajkumar ji, here we have decided these strikes. This is for the December expiry, 26th December expiry. So this 26th December expiry, we have decided upon the strikes of 31,500 call and 30,000 put to buy, we have decided 32,500 calls to sell and 29,000 put to sell, each 2 lots. And again, I'll say, if there is no liquidity, wait for the time. It is 14th of November. We have ample time to initiate this strategy. So now 31,500. So 31,500. So here our 31,500 call. So if I go for, so 31,500, and so this is for, I think this data also is not updating. So if I can get the option data, 31,500 call and 30,000 put. So this is what we are going. You can check it from your end. So I have found out that this is the tradable values. 535, 465. This is the tradable for 26th December expiry options. And we are selling 32,500 call option, 225 each. So 550 rupees we are getting, 535 rupees we are paying. So 15 rupees gain we are getting. So sorry, 450, not 550. 450 rupees we are 450 rupees we are receiving, 535 rupees we are paying. So 85 rupees we are paying for this, and in the put strikes we are receiving 500 and paying 465. So here we are making 35. So this particular strategy we are initiating with the debit of 50 rupees. So debit of 50 rupees, maximum duration of 10 days we are holding, and maximum expectation is, so 300 if I can take, 300 minus 50, so our expectation is 250 multiplied with 20, so this comes to 5,000. 5,000 gain we are expecting, 10 days of maximum holding, and this is the process of entering the things. So whenever we enter the trade, that doesn't mean that the trade will always give the profit, no loss will be there, and we can just hold for 10 days and it will come to our pocket. It is not like that. So what happens here, we have taken the first cycle, we have ignored, we entered the strikes which is having the second cycle. So if during this 10 days period, very carefully listen to this, during this 10 days period of our holding, if Bank Nifty climbs to the second cycle and comes to the midpoint of this, like 32,000, or if it falls down to 30,000 and 29,000 here, 29,500. So at any moment during this 10 days period, if the Bank Nifty climbs to 32,000 or falling down to 29,500, though it is far from this current level now, 1,400 points down from the current level, or almost 1,400 point or 1,500 point above from this current level, if it happens, so we have to exit this strategy. That time we will have a minimal losses. That losses will come because of your theta decay will be there. However, the delta additions will be there in the selling side of options. So that can give you a minimal loss. Now question comes, if that is a minimal loss, then how much loss it will be there? So that is very important to know. So need to see whether that December expiry we have bought call option of 32,500, we are selling 2 lots, and here also put options. I am going for 30,000 put options, buy 1 lot, and I am going for the put options of 29,500. Sorry, 29,000 to sell 2 lots. So this is what I did, and 10 days is maximum holding period. I calculate it here. So this gives me a clear picture in this software. During this period of 10 days, if there is a consolidation happens, I am at a profit. However, theta decay is not considered here in a great way. So during this period of 10 days, if it manages to move above 32,100, then I am at a loss. I'm entering to the losses at 32,300 also. So this liability will be around 2000 rupees, and same time if it is falling down to 29,500, I'll be having a liability of 1500. However, this 2200 to 1500 is the 1500 to 2000, 2200 will be your liability if this thing happens within 10 days period. If it doesn't happen and consolidate, you will be adding the values here. Along with that, 946 rupees of credits, whatever is, sorry, 946 debit what you have paid, it will be there. And theta decay also will be added. So what is the theta here? Theta is telling 9 rupees of theta per day. That means 40 net lot size is 40, 40 into 9, so 360 rupees of time value per day you can gain for 10 days period. So that also will add on to your profits. So this software doesn't give that after 10 days, this, if this add-on happens, then how much profitability will be there. However, this will be the additional profit you can get in that. So this theta decay part also will add on to your profit. And same time, your Greek scanner can give you all details about the Greeks of these options, whatever is trading. And you can see that if that particular option chain is loading here, then I can show you that this is very much liquid now, and you can initiate. It is very much liquid now, and you can very well initiate these trades. If liquidity is not there, just wait for the day when that liquidity back to your. So here 26th December. So this is the tradable strikes. We have been talking about 31,500 and 32,500. Today also 800 open interest added. So it will be less now. It is once you near towards that expiry, then the volumes will pick up. So however, it is very much this 500 strikes are trading now. So keep following this strategy. Even though if you do not initiate this strategy, keep following this strategy for 10 days period. Again I repeat, this is the buying prices and this is the selling prices of the strikes. Preferably you can record tomorrow's price, because today you are coming for this event. So 15th you initiate this strategy for 10 days period, 10 trading days. Keep tracking this particular strategy and give your feedback. So how much you have gained, how much you have lost. So that feedback you can give me that time. So this is the selling up to 2 lots, buying 2 lots, net 40, 9 rupees positive, your theta 360 rupees per day. 10 days it is having a projection of 3,600. Along with that, if there is a consolidation happens, it can add on some 1,700 to 1,200 rupees profit. Furthermore, however, the demerit part of that things is, if during this period of 10 days, if it has spiked to a level of, you can say 32,000, or fall down to a level of 29,500, so which is 1,500 from this current level. If it happens so, then you have to exit this strategy at a loss. So that loss also restricted to 2,200 to 1,300, 1,500 to 2,200. Margin required for this trade, current margin situation. The renewed margin situation, what I have shown you in that article, it has not been implemented. Current margin situation is 2,54,000. If the new margin system comes into effect, then this can be reduced to a level of some 54 or 55,000. That time it will be highly feasible to implement this kind of strategy. This strategy can be taken with the Nifty. However, do not initiate this strategy with the stock options. Reason, stocks having all probability to climb by 40% plus or minus at for any news, rumor, anything. So that time it will be counterproductive. For index, to move by 3 to 5%, it will give you enough time to escape if the strategy is not in favor of you. So implement this strategy only with the index options, not with the stock options. Software definitely shows the profitability. If you hold this strategy for 3 days period, this will give you for the 3 days period whatever the profitability. If you want to hold this strategy for 3 days, you calculate it here, it can project you. If you can hold it for 10 days, then this is theta positive strategy. What is the profitability? It is there, it will show you. So desktop editions, you can't able to increase the IV and decrease the IV and project. As I said to you, Android edition of this software, you can add 5% IV increment, 5% IV decrement and project that strategies also. Once you get this recording of this particular event, you visit this recording for a couple of times. Even though if you are not initiating this strategy, or if you have a margin issue not to initiate this strategy, better do a paper trade in this strategy for 10 days period. I told you the first rule, beyond 10 days we are not going to hold this particular strategy, or any fall below 29,500 or any rise above 32,000. So we are going to exit from this strategy. If these values come earlier than 10 days, you need to exit. If this values doesn't come but the time elapsed by 10 days, then also you have to come out of this strategy. If you are taking for December series, the strike of our choice was different. That says the strategy which is initiated now, if it can hold for 28 days, then the same strategy can give me 326 minus 50. So 275 rupees gain. 275 rupees gain it can give. So whatever the net loss you can add. Which strike to buy and which strike to sell, it is very important. For that you need to take the help of monthly volatility. Take the 1/3 of that, means first cycle you are skipping, second cycle wherever the price came, so nearest liquid strike you have to take. 31,700 it comes, but 31,700 we do not have a liquidity, so we will go with the 31,500, or you can go with the 32,000, 33,000, but 33,000 strike is not there. Session to convey you that there is a method to earn consistent gain in the option strategy, and this is a strategy you can follow judiciously as per the procedure. Again I say, as per the procedure of entry, as per the procedure of exit. If you follow this strategy, then you will be highly rewarded in this particular strategy. And again I will be appealing you, if you have free time and if you just want to learn some more option strategies, do join this 23rd, 24th and 30th November option course. It will be conducted in English and Hindi. Timings are given. If these times are permissible to you and you are free on these times, and if you really want to learn, then do join this program. You will be learning many new concepts like max pen, like IV percentile and ranking, how to use them. So all these things you will be learning in this session.